Now, at its first monetary policy meeting of 2018, South Korea's central bank has raised its growth forecast for the local economy by 0.1 percentage point to 3%. As for the key exchange rate, it was a widely expected move. The Bank of Korea stood pat on its key interest rate of 1.5%. Kim Hyesung reports.
The Bank of Korea kept its benchmark interest rate unchanged at 1.5% on Thursday. This follows the first rate hike in over 6 years in November when the central bank raised its record low interest rate by 0.25 percentage point, tightening its monetary policy. However, the BOK says the nation's overall economic picture appears mixed. It says there are upside and downside risks for inflation. The core inflation rate in December was at 1.5%, below the central bank's target of 2%. Rising global oil prices are supporting higher prices, while the Korean won's rise against the U.S. dollar to the strongest level in more than 3 years is starting to weigh on import costs. Experts say raising the key rate would place an extra burden on households, as the country's household debt now hovers at around $1.3 trillion, with the average household debt-to-income ratio at about 130%. Analysts say the central bank will likely raise rates gradually this year, sometime in the second quarter or later, after policymakers have had more time to assess the impact of the first increase and get clearer signals on the inflation rate. Kim Hyesung, Arirang News.